Hello viewers, in this video I'll be going over the S&P 500 ETF ticker symbol SPY. We are currently at 60 basis points up, and on the 4-hour chart we reached the 4-hour RSI is at overbought levels, but I do see we may be retracing and finding support on the 9 and 18 moving average on the 4-hour chart. So that is approximately, I would say, in between. We find support at 288 and 80 cents. On the daily chart, we can see we are nearing an overbought RSI, and I do believe the next resistance is the highs of last year, which is around the price of 293.90, and if we were to move up from then to now, that price movement is only about 1.3 or 1.3% movement up. However, if we were to move down, the price movement is only about, I would say, around 40 basis points. But if that support does fail, the next support will be the 18-day moving average. So from now to then, that support is only around 1.8% move down. And on to the next module. On here, I'll compare this current trend that we are at now with this trend. This trend dates back to September 26th to December 20th, 2006. So I'll point out why these two charts are similar. So what we have here in the beginning of the trend is an upward trend and we have a dip on this instance right here, two dips touching the middle Bollinger Band and finding support and continuing on the upward trend. And you do notice that the current trend has been an upward movement for several weeks. And we can see the action on second chart here. So I'll draw out the upward trend that we had here. This trend occurred for several weeks. We do see a dip touching the middle Bollinger Band right here, and another support on the middle Bollinger Band right here as well. And then after finding two support on the middle Bollinger Band, we do see an upward trend continuing on, hugging the upper Bollinger Band. If you're not familiar with the Bollinger Band, it's a tool used to measure price level and volatility. So what we have here is 1, 2, 3, 4, and 1, 2, 3, 4 points that are identical. So if the trends are identical, there's reason to believe that the outcome or the forecast will be the same. So the forecast for this timeline should be roughly the same for what it will be in the next coming days for the S&P 500. So as we check the forecast model, I'll go day by day. So the trend that we took a look at was September 26, 2006 to December 20th, 2006. We are currently at day 0, 1 days out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, 7 days out. So we may be around a flat section. Flat is 4 basis points up. So I believe in 7 days we will be flat, and we may possibly go higher as long as there's no news. The trend is up, so it will continue to move up until we reach the resistance or the all-time high of last year. When we compare the trend, this is what it looks like with the September 26th to December 20th and 2006. The trend fairly aligns up, looking alike. And that is all. If you enjoyed this content, feel free to like, subscribe, and thank you for watching.